Schwab US Dividend Equity ETF, or SCHD, has had a less than perfect year-to-date performance. Now, this is also due to things like some of the top 10 holdings in the SCHD ETF having a less than perfect track record year-to-date also. But in this video, we're going to go through and I'm going to explain on why I've been buying the Schwab US Dividend Equity ETF on a daily basis for a while now, and why I think where SCHD is trading at currently is potentially offering a once-in-a-decade buying opportunity for long-term investors that don't necessarily need the cash today or tomorrow. Now stick around, drop a like down below, and subscribe, and let's get right into it. Now, without wasting any time, one of the main reasons on why I think the Schwab US Dividend Equity ETF is offering a massive opportunity for investors that have a long time frame ahead of them is for the simple reason that if investors like myself that have, say, 10, 20, or 30 years ahead of them in their investing career, dividend growth investors as of today can lock in a nice, decent starting dividend yield when it comes to the SCHD ETF of around 3.57% more or less. Now, you might be saying, well, that's not necessarily all that high of a starting dividend yield, but the real magic is here. The real magic is the dividend growth that SCHD has. So dividend growth rate is a measure that indicates the annual rate at which a company's dividend payments have increased over a specific period of time. It represents the compounded annual growth rate, or CAGR, C-A-G-R, of dividends over that period. And the dividend growth rate is often expressed as a percentage. Now, if you were to calculate the dividend growth rate, you would typically take the difference between the final dividend payment and the initial dividend payment, divided by the initial dividend payment, and then divide that result by the number of years in the period. And finally, the result is expressed as a percentage. And to be more specific, looking at the SCHD's dividend growth historically, back since 2013, there was an 11% increase in annual dividend payout. The next year, a 15% increase in annual dividend payouts. The next year after that, 9.5%, 9.7%, 6.9%, 6.9%, then 19, 17, 10, and then as of recent last year, 13.9% of annual payout growth. Now, this is really significant to me because looking back in history, and keep in mind, just because a stock or ETF did something historically does not necessarily mean that it's going to continue to do so, but this is just basing it off of history. Back in 2014, 2013, around 10 years ago, the Schwab US Dividend Equity ETF was paying around 25 cents or so per share per quarter. Now, 10 years later, around 65, 66, or even 70 cents per share per quarter. Now, the difference in dividend payouts over the last 10 years is almost 3 times as much as you would be getting around 10 years ago. And what gets really crazy is if you try to forecast out your income over the next, say, 10, 20 years. Now, you see the title of the video, I said that this could be a once-in-a-decade buying opportunity to lock in a starting yield of around, let's say, 4% or so because that gives you an initial boost. It gives you an initial head start almost, which is only going to allow the dividend growth rate to push your yield up further. Now, if you're anything like me and you're an investor that dreams about living off your SCHD income in the future, whether it's maybe 5, 10, 15, 20 years from now, the real magic is going to happen from the power of compounding. And what I mean by this is right here on the screen. You can see right here based off of 1,000 shares of SCHD, which is what I'm hoping to have towards the end of this year, based on a dividend growth rate of 10%. It says your account 5-year dividend growth rate is around 12.3%, but a 10% is a more realistic rate for diversified portfolios over a longer period. Now, when it comes to dividend reinvestment, it's currently turned off, but if we turn this on, this is going to give us another 3% boost because based on your account's yield, we'll assume reinvesting adds around 3% of growth rate for your total annual dividend growth to be around 13% or so. And as far as annual contribution, we're just going to keep this off for now at 0. So now this is where the magic happens, looking at where SCHD could be a decade from now. And of course, depending on how many shares of SCHD you or I have at this point, and if we are going to continue to add more as far as annual contribution, that's going to completely change the scenario. But just for a second, looking at the current scenario of a potential income from SCHD around $2,600 per year, just around 4 years from now, $4.8 thousand in dividends per year. So it's just about doubled in just a few years, and that's because, of course, the massive dividend growth that SCHD offers, and also, not to mention, reinvesting the dividends along the way. Now, what's really crazy is about 10 years from now, in 2033, $8.8 thousand of annual dividend income, which is well more than double what we're currently getting. And of course, if we want to stretch things out even further in the future, 2038, we're talking $16,300 per year, and then 2043, $31,000 per year in dividend income, and that's if I never buy another single share. Now, don't get me wrong, when it comes to the SCHD ETF, there's definitely things that I'm not necessarily thrilled about. Things like the current top 10 holdings. I'm not honestly the biggest fan in the world of these top 10 holdings. Some of these names in here I'm a huge fan of. Names like PepsiCo, Texas Instruments, pretty good. I like names like Broadcom and Chevron. But some of these other names in here I'm not necessarily the biggest fan of. And of course, there's definitely things that are weighing down the portfolio. The fact that Verizon, for example, makes up a large portion of the SCHD ETF as of right now and is down around 22% year to date. There's definitely more than one reason on why this ETF is being dragged down currently. But what I think is going to be the saving grace when it comes to SCHD is the overall objective. And we've went through the overall objective in previous videos. It's the fact that it tracks the total return of the Dow Jones US Dividend 100 Index. And please watch some other videos on my channel because I go through this index in depth and explain exactly how it works. But this is exactly why I think the SCHD ETF is going to perform just well long term, and why I think the dividend growth rate could potentially keep going up and up and up from here. Now, when it comes to long-term performance for the Schwab US Dividend Equity ETF, I get it. Over the last year or so, it hasn't really done much besides trade sideways and now down a little bit. And as far as ETF price, it's been a while since we've seen a massive bump in the price of SCHD. And of course, all investors have their own strategy and have their own things that they're really looking for. But for me personally, because of the index the SCHD ETF tracks and the methodology, I think there's going to continue to be stocks within the index that are going to not only continue to pay dividends long term, but also continue to raise their dividends consistently. Because after all, looking at the annual payout growth year after year after year when it comes to the SCHD ETF, that's all we have to go off of. Not to mention, if the year-end yield for SCHD at the end of 2023, let's say, sits at around 3.75 or 3.8%, let's say, that's once again, just like I was saying earlier, going to be a great opportunity, at least historically, for investors to jump in. Looking at what the SCHD's year-end yield was over the last, say, 10 or so years, there's only been a few times on when investors could jump in and get a starting yield as high as that, and then later on hopefully ride the yield up and up and up to get your yield on cost above 4%, above 5%, above 6%, and maybe in the next 10 years have your yield on cost above 8 to 12%, which in that case you are going to be earning a ton of cash flow on a quarterly basis if the SCHD, only if, it continues to do what it's done in the past. Now, the last thing that I want to talk about is the possibility of the future dividend growth for SCHD to go down from here. We did see just as of recently back in June, I think, the SCHD ETF's June dividend was a decrease. In 2022, the June dividend paid 70 cents per share, and then the most recent June dividend was 66 cents per share. But to be fair, the most recent September dividend was 65 cents per share, and the previous September dividend was 64 cents per share. So we did still see a little bump in dividend increase September year over year, but once again, taking things into consideration like the SCHD methodology and the reconstitution, the fact that there are going to be different stocks on an ongoing basis that are going to be added and taken away from the ETF, which is going to change things like the ETF's performance as far as price return, and not only that, but the total return, how much dividend income this ETF is going to pay over a long time frame. All these things definitely have to still be taken seriously, and that's why I'm by no means just blindly buying into the SCHD ETF for whatever reason, but I'm going over all the data, the methodology, how the ETF works, and the historical performance. And so far from everything that I see, I think this ETF is going to be around and better than ever once this ETF gets out of this recent slump. But now when it comes to the SCHD ETF, I want to hear from you guys down below. Do you think that as of right now, where the SCHD ETF is currently trading and the current dividend yield that it's offering, do you think this could be a once-in-a-decade buying opportunity? Or for you personally, is this ETF something that you're staying away from for now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.